Joe Tigay is a managing partner at Equity Armor Investments down at the Seaboat. Joe, let's talk some slack and then the market as a whole. You ready to bet on a bounce here? Give me something bullish on work, Joe.
Yeah, like you mentioned, this chart's been horrible. It's really been cut ever since it's IPO'd recently, so it's been a downward trend. There's no question about that. But it seems to me recently, in the past few weeks, that downward trend has been violated slightly, and we seem to be consolidating down here in this 20 to 22 area. In fact, we haven't made a new lower low, and if I look at the chart very recently, a 4-hour chart, I can even make the case that it looks like a potential head and shoulders bottom could be forming there. So I think that the price has been corrected. Now we're consolidating here. The chartists love that. And then looking into this earnings play, it's not a stock I would want to go out and buy, but into this earnings play with a chart like this, it's something I might find interesting because, of course, the catalyst is there with the earnings event. It could get a nice pop above that 22.5 area. I think there would be a really significant pop there if it does break out there. And finally, we'll get a higher high, and then maybe people will start coming into the stock. Maybe even some shorts will be coming out.
Okay, so I like it. You're cautiously kind of dipping the toe because any play here in the stock is going to be expensive. I mean, you're paying through your nose for volatility right now in work. Maybe that's because if it breaks down, then it's like this potential stabilization is now blown out of the water and the thing collapses. On the flip side, if it does finally get a move and we break higher, then look, who knows where it goes because it's only gone down. Market maker move at this point in the stock is about $3, so over 10%. Joe, walk me through maybe either what you do for options, or are you just waiting to see if it actually does prove itself to really pile on?
I'm actually looking at the 22.5, 25 call spread. Yeah, like you said, there's a lot of juice in the at the money options. I can collect a little bit back by selling 25. That does stop me out at 25, of course. I actually put that spread on for 90 cents. The 22.5s by themselves are $1.60, so you can see how expensive those are. I would consider the fly that would be selling 2 of the 25s and then buying the 27.5, but the 27.5s are very expensive themselves, so I don't want to buy that for 35 cents because that's just too rich. So I'm just looking at the simple call spread. I can turn 90 cents into 250. It's more than double my money. If I'm wrong, you know what? It's better than owning the stock because the stock can go all the way down to zero. I'm just out 90 cents.
Yeah. All right. Whoa, zero. Come on. This is like the least bullish trade I've ever heard, Joe. All right. Cool.
That's what options are made for, right? You got hedge your bets. You can make a little. You can spend a little bit of money to double that, and that's what I live for.
Yeah. All right. So the call spread on work. How about the market overall, Joe? We've got a solid little bounce today. I mean, one day, right? Well, I guess maybe we got a day and a half of selling.
One day, it's risk off again, right? We have the VIX below 14.5. It's amazing, right? And honestly, 3 straight selling days. We hadn't seen that in a while. We actually saw the VIX up at 18, if you can believe it, just for a heartbeat. So certainly there was some serious risk going on out there. And then all of a sudden overnight, you get one positive news story. I mean, this has just been the story of 2019, right? We've had the risk the trade on, trades off, and it just keeps on happening and happening. And you know what? At this point, I think today traders are saying, why am I fighting this? It just happens every time. The market keeps on going higher. The Fed is there. The trade deal, no trade deal, doesn't matter. As long as there's hope for a trade deal, the market's going higher. I'm a little more skeptical on that, but for the time being, I think the market's content.
All right, content, right? I mean, the data this morning, even if we come up short on some of the ISM stuff like we've done this week, it's still solid, especially on the services side as we see. We're still cranking out 53s, and the rest of the world.
And you know what? If you can ignore those headlines, it's a lot of noise out there. There's a lot of uncertainty. Just looking at the charts, looking at the SMH, I was looking at that yesterday, the semiconductor index. We had a gap lower yesterday. I thought, you know what? The long-term bull trend certainly still intact. Maybe it could make sense to pull back a little bit. However, I first of all expected the gap to be covered from yesterday where we gap lower. We covered that this morning. Now, if we can take that out and make it a little higher, I think the short-term trend will again turn bullish on that semi. It's something I've been very closely watching for this morning and throughout the day. If we can make some higher highs, I think there'll be a lot more calmer action in the market.
Yeah. All right. We'll see if we can hold on to it right now because it's a pretty strong move. Bonds and gold also giving up some of their big pop from yesterday. Joe, appreciate it. Mr. Tigay is a managing partner at Equity Armor Investments.